So let's get to our weekly catch up with Gemma Dale from NAB. It has been a wild week. So very quiet on the economic front, a little bit of corporate news out, which we'll get to. But after being sold off in anticipation of this inflation read, what's happening today? Well, we're seeing this market pushing higher after that wild ride on Wall Street. Let's get some perspective. Gemma Dale from nabtrade is here. Hi, Gemma.
How you doing?
Okay, yeah, that was wild last night. It's really interesting to me to see this market up to the extent that it is so far today. I know it's early in the session. Was there any sort of reflection on the nabtrade platform leading into this inflation read, which would have given you some indication as to how traders are feeling?
Yeah, it's an interesting question because we have to keep reminding investors the global news is really dramatic, particularly the US, but things are pretty modest here in terms of volatility. It's a much more stable market, and we're seeing quite stable volumes as a result of that. So we're not seeing investors massively trading the flows, although ironically, globally, we're seeing a little bit more of that. So when people are trading international, that's what they will be doing. There's far more active movement in the market to get excited about. But back home, our guys, you can see it really strongly in their behavior. Nothing's cheap enough to leap all over it. Nothing's expensive enough to sell it, unless they're sort of talking energy specifically or a couple of other little sectors. So most people are hanging on to what they've got and sitting on the sideline. And it takes sort of individual price action to drag people out and get them moving.
How about the trade sizes? The value of the trades, essentially, because I remember a few weeks ago, they were quite large.
Yeah, so that's still happening. It's been really interesting. Probably the last 6 months. At the beginning of the year, we started to see trimming. People were starting to go, God, this is quite toppy. Things have come back really hard. I reckon it's time to take some money off the table. And cash levels have stayed really high. And what we've found is that there absolutely has been a withdrawal, as in just sitting tight, not selling, just sitting tight, withdrawing from the market by disengaging more than anything else of younger, less experienced investors, but wealthier, older investors, and people who've been doing this for a long time, they're moving. And so what it's meant is average trade sizes are huge, and they're staying really high. A lot of them are massive.
Now, we did get a bit of news from the banking sector this week. Bank of Queensland, its result had a very favourable reaction, even though we continue to be warned about this, souring economy and all the rest of the bad news out there. I feel like I'm just a harbinger for bad news these days. But we saw Westpac rising significantly. We saw some of the brokers weighing in, saying, look, it's a competitive landscape. This net interest margins are going to be good for the banks. So we're now traders trading the banks?
Yeah, this is so banks have been really boring for everybody for ages. No one's been trading banks at all because they bought them all during COVID. They've got a ton of banks. They don't need to buy anymore. Weakness is not interesting to anybody, and they haven't been high enough to sell. They want to sell CBA at 110. They don't want to sell it in the 90s. How boring. So there's a real reluctance to kind of engage with that part of their portfolio, so they just leave it ticking along. But this week, they're like, oh no, this is interesting. I might get involved again. And NAB was the massive sell. Absolutely enormous. Trade sizes were, let's say, 3 times the average. Absolutely enormous.
What was the price level that was sort of the trigger?
$30. So it's a $30 threshold for NAB. They've seen it above that level a few times, but then they've seen it fall away again. So a lot of them are like, do you know what? That's quite a nice number. Clearly people have alerts set at that number, and that's when they're going to get in. They were selling a little bit above that, but huge selling, massive 90+% and massive values. And then Westpac also. So Westpac was one where they're kind of like, I'm happy to trim that. Westpac's been the big buy of the banks over the last 18 months. So it was a big buy last year, and they haven't done anywhere near as well out of it as they might have hoped to. They were waiting for that reversion, and it just didn't happen. It was quite the laggard. So I think a lot of them, when they see a pop, are like, I'll get rid of it. I haven't done super well out of this. And then BOQ as well. They loved that.
Interesting. Okay, now Fortescue Metals, I know we talk about it every time, so it's sort of like a litmus test, right? Iron ore price hasn't been doing much. I had a conversation with an expert yesterday just saying, it's been a bit boring. Has Fortescue been boring?
It's not what it used to be, in that we used to see just insane values going through it all the time from this small handful of traders who know exactly what it's going to do. They're very comfortable with trading it. They know how to kind of work that particular stock extremely hard. So they were buying it under $17. That was a nice day for everybody, and the real volume popped right up. But it's lower than it was, and it's not consistently number one anymore, and that is interesting because it was consistently the most traded stock every single day for probably 6 months.
Okay, so we will keep our eye on that. Lithium, it wouldn't be a session together if we didn't talk about, you know, our good old lithium stocks. Was it the producers? Was it the explorers? You know, how did it play out?
It tends to be more the producer side. Like, I'm excited that it's something other than lithium at the moment. Like, it's all materials with a bit of energy, and mostly energy is selling just because people have done so extraordinarily well out of it this year. Those who are holding are like, I'll just keep trimming, this is okay. And then if there's any pullback, they'll sort of rotate back into it. But yeah, the lithium story just keeps playing out. So Pilbara Minerals was our most traded stock a couple of days last week. It was NAB yesterday, but as a sell, not a buy. So it's quite interesting to see some other things coming through, but the lithium story, it's every day. Got Pilbara Minerals, got Core Lithium, got a couple of others. They're in there every day.
Okay. Let's look beyond our own borders, though, to what's going on internationally, because we've seen selling in Tesla. Is that an opportunity for NAB traders?
Yeah, I mean, Tesla's just such a consistent story. It's ridiculous on the platform. We have seen a bit of selling here and there in it. Before that, it was just day in, day out, consistent buying. Not huge trade sizes, but not tiny either. You know, the meaningful amount of money for most people. Every single day, you would see Tesla buys a multiple of everything else. Like, you would just see so many more of them. It started to pull back a little bit, and there's been a little bit of selling. What is most interesting, and I think I've talked about this a few times, but it's just happening more and more now, is we are starting to get more active traders internationally. These are people who are awake and trading while the market is open, and they are trading directional stuff, mostly ETFs, and they're really trying to play this volatility and get some really short-term profits out of it. That's quite interesting to me. I mean, that's a real commitment. It's not like the rest of our base who are like, I'm asleep. This is a buy and hold for me.
So they are traders. They're living up to the NAB trade.
100%. And they're actively trading a market that is on the other side of the world. Clearly the world's changed dramatically, right? nabtrade turned 10 this year, and 10 years ago, if you wanted to trade international markets, it was too expensive and too difficult. Now, you've got it all available to you. You can do it on your phone. You've got incredible quality data and information available to you, so you feel relatively well informed. It's not like it used to be, where it just had to be in buy and hold, and you would probably always outsource to a professional. Now you can actively trade it, but it is really interesting to see how many people are willing to do that now and actively trading it on a daily basis rather than a, let's say, a monthly basis.
Okay, anything in the ETF sphere that we need to know?
Back home, not so much, actually. I get this question all the time at the moment. Are people buying thematic ETFs? Are they buying more trend-driven stuff? And we're really not seeing it, which is quite surprising. It's still always the ASX 200. That's the most popular. And then every now and then you'll see a bear hedge fund or something like that. But it tends to be a really tiny group of people. And then internationally, they'll go into this directional stuff.